Hey everyone, and welcome to Earnings Cheat Sheet for Friday, August 16th. It's Alexis, Garcia, and Ed Carson here, and we'll be taking a look at some key upcoming earnings reports to help you prepare for the week ahead. So Ed, a little bit better week for the market this week. We had a follow-through day on Tuesday, but what do you have on deck for us today?
Yeah, I want to take a look at three stocks: Cava, Palo Alto Networks, and TJX.
All right, well, let's start with Cava, shall we? The Mediterranean fast casual dining chain is scheduled to reveal Q2 earnings. I like saying reveal, Ed. It sounds a little bit more mysterious. On Thursday, August 22nd, earnings are expected to fall 38% to 13 cents per share, and revenue is expected to rise 24% to 218.5 million. And here's why we're watching Cava. We'll be paying attention to same-store sales growth and guidance, and the stock is also trading near highs. So Ed, Q1 results, Cava topped expectations there, lifted its outlook for restaurant openings and same restaurant sales growth, but saw declining guest traffic. So we'll see if that trend continues this quarter, but I think you've mentioned several times, restaurant earnings have been a little hit or miss here this earnings season. So what are your thoughts with Cava heading into earnings?
Yeah, I think that's one of the big mysteries is, we've seen some earnings that have really, the stocks have soared on earnings and others have tumbled. So something to note. Yeah, the traffic fell last time, and I think they raised, store expansions and higher prices offset that. So can they continue to, really boost sales? And obviously they're still expanding stores a lot, but can they boost their same store sales if traffic doesn't pick up again? So that is really important. This is sort of bellwether. This has been the top performing restaurant stock in recent months. So would really like to see this one continue to do well. There are still a handful that are doing well. So would like to see that. It really has had stellar performance in 2024 in terms of earnings and the stock price.
All right, well, let's take a look at the chart. I'm going to start on the weekly, Ed, because we had a bullish rebound here the week ending August 9th, an 11% gain, came off those lows to stay above that 10-week line. And if we switch over to the daily here, we can see a little bit better, forming somewhat of a cup here. But what are your thoughts here with Cava stock as we approach earnings next week?
Yeah, there was probably an early entry that could have been done as it moved above the 50-day line. It would have been, as it turned out, it may work. But, at the time it was like, well, it's not that long before earnings. It has made some gains, but it's still going to be something that it could be an issue for those who bought there. They may have a decision to make. Right now, look, it's been acting great. The RS line is almost at new highs. There was nice volume on that move above the 50-day line. You see, that was really... There was no doubt about what was institutions were trying to get into that. Ideally, this stock would sort of make a handle here. And this is one way, as we talk about the market, it'd be nice if it could take a pause. Well, this is a stock that could really use that because it feels a little extended here, but then break out on earnings. We'll see what it does here, but acting very well. You say it's sort of forming a cup base, almost there. It might actually get to a cup base by earnings if it can avoid moving higher, but a lot to like. And you can see the fundamentals, really strong growth. It's shifted over into profitability. Sales growth remains really robust. Sales growth is expected to continue slowing. That is something there. But investors should definitely be expecting a big move on earnings, up or down.
Let's move on to the next stock, shall we? That's Palo Alto Networks. The cybersecurity firm is scheduled to report fiscal Q4 earnings on Monday, August 19th. Earnings are expected to fall slightly by 2% to $141 per share, while revenue is expected to climb 11% to $2.16 billion. And both those numbers show slowing growth yet again, with EPS going negative. And here's why we're watching Palo Alto Networks. We want to see if they're getting any boost from the CrowdStrike incident fallout. Shares are also forming a base ahead of earnings. So Ed, several analysts, including Morgan Stanley, have lifted price targets on Palo Alto over the last week leading up to earnings. What are you looking for?
Yeah, can they see that benefit, that outlook? Are they going to show any signs that growth is going to pick up again? That would be something to look at because it has growth has slowed on the revenue side for several quarters. It's supposed to go negative on earnings. It'd be great if it could actually deliver actual earnings growth. See if it can reestablish leadership. I mean, look, everybody expects cybersecurity demand to continue to rise, and so I think that's one reason why these stocks, these software names have pretty high multiples because everybody sees people have to spend it. They got to keep spending the money on here. And this has been a leader. It's struggled over the last couple of quarters with its earnings, so it needs to turn that around. But yeah, it's definitely want to see that growth story pick up again.
All right, well, let's move over to the chart. So Palo Alto's had a really strong comeback after the market sell-off earlier this month. Shares have moved powerfully above those 250-day lines. And Ed, we've seen a lot of action like this from stocks just coming sharply off these recent lows. So what are your thoughts here as Palo Alto works on this base ahead of earnings?
Yeah, I think that you could have, if it weren't for earnings, you could have done a downward sloping trend line all the way from 380. And that would have probably been all the way across, and it would have been something you could have bought in there, maybe yesterday. I mean, not yesterday, earlier this week. There's a 345 level that it's sort of nudging up against. Again, you'd want to wait for earnings. It'd be great if it could just pause for the next couple of days and wait to see, and then maybe the 345 could be sort of a resistance level there. You can see what it did 2 quarters ago. Just horrible earnings report. I mean, that is just still trying to recover from that report. On there. The next earnings report, not great, and it didn't really, I mean, it sort of meandered after that for a while. So definitely you can, there's definitely been gap ups in the past as well, but boy, you got to watch out for this as well. Can it reestablish that? This is a big deal because we have a lot of cybersecurity firms that are setting up or doing well. This would be a nice, strong signal. Software in general is trying to come back. This is one of the bigger reports, one of the last. I mean, there's going to be a few others, but earnings season is winding down. This is one of the bigger names in software that's left.
All right, well, let's jump to the next name on our list, which is TJX. Are you a Maxinista, Ed?
What? A fashionista?
A Maxinista, I guess is what we call
it.
A
Maxinista. I haven't gone there too much. I would shop at Ross, which is one of its peers. And for some basics. And I remember a few years ago, when there's still discounts in Kohl's, I went to the bargain bin and look at my dream wardrobe from that. But TJX has a lot of ads. And there's that treasure hunt that everybody likes with those off-price names.
Yeah, that's for sure. They report earnings on Wednesday, August 21st. The retailer is expected to see Q2 earnings rise 8% to 92 cents per share, and analysts expect revenue to climb 4% to 12.48 billion. And here's why we're watching TGX. We'll want to see comparable store sales growth figures. That's sales of stores that have been open for 2 fiscal years. So now experts predict comparable sales will rise just under 3%, which would mark 3 straight quarters of slowing growth. And we'll also want to pay attention to guidance and any comments on consumer spending trends. So Ed, as you mentioned, TJ Maxx, Home Goods, Marshalls, these are all part of the TJX portfolio. And, the stock's been riding high over the last year thanks to inflation and, recorded 20% or greater earnings growth over the last 4 quarters. So what are your thoughts here, and why is TJX standing out to you?
Well, I mean, in a sort of uncertain economy, consumers often trade down a little bit. So it's these often can do well in this kind of economy, which modest growth. They're pinching their pennies. People aren't broke necessarily. So it's a good environment for that. They find value out of that, and this has been a company that's delivered strong profit growth over the years. So this will be another mindset to see if one of those discounters that's done well. There's Walmart, there's Costco, there's others. And not all discounters are doing well, but this is one of those that's doing well. So want to see the health of the consumer. It seems like the right environment for a company like this. It's also defensive growth names often are what does well. Not just for the economy, but in the stock market. So want to see if that growth can still be steady, because it's off. They still have pinches. They have labor costs. The cost of goods continues, rises on their end. So want to see if they can maintain that strong, solid growth.
Right. And you mentioned Walmart. They reported earnings on August 15th, the day we're taping, and they had earnings and revenue beats. So maybe one to watch there to see how TJX might react. But let's hop over to the chart, because as we've seen, Ed, shares moving above the 50-day line, but have held pretty steady as the market has pulled back here.
Yeah, I mean, it had a nice move after earnings, and it just sort of held up. It didn't get to the 20% zone. I think if you look on a weekly chart, this is one that may have a base that forms after this week, especially if it moves above the 50-day line more decisively, because it's sort of low in this proto base here. But this would be the 5th week of what looks like would be a flat base. So it could have a base. So the top of this recent consolidation would be a new buy point. But, again, if it weren't for earnings, you could say that as it's moving past the 50-day line, especially if it showed a little more strength on a daily, it would be, you would probably be offering a buy signal. But, there wouldn't be off a lot of time there. But that's just showing, because it is the first test of the 10-week line, 50-day line since the breakout. And we usually say the first or second time it does that, that's a chance to maybe buy or add on shares. Definitely showing strength for the relative strength line. Yeah, it's come down a little bit in the past week or two, but that's after really moving up. It held up pretty well for quite a while. This is definitely one to strongly consider.
All right. Well, those were some of the big names on our radar for this week, but let's do a lightning round and take a look at a few more, Ed, starting with Toll Brothers. The home builder reports August 20th. And this one, attempted a breakout here, rolled over with the market sell-off, but, it seems like it's really trying to find its footing.
Trying to find its footing, but it hasn't bounced back that well. I mean, it really hasn't. So it's off the 50-day line, but really it hasn't, from the close of August 5th or so, it's sort of gone flat. It's gone sideways. It's been constrained by the 21-day line on the other hand. So, and yeah, yields are off their lows, but it's also, that's when people were panicking, and so if you have a modest economy with lower rates or generally lower rates, you would think that upscale buyers would still be available, but so this is because this is sort of luxury or entry luxury homes that they make. So this has not come back. You'd like to see some of the builders have come down, and after making a nice run, they've sold off and haven't responded super well necessarily. Not terribly, but they just haven't led the rebound. I would like to see that. So the growth has turned around on this, the revenue, a couple quarters of acceleration. See if that can continue here. So it'll be important for home builders in the housing sector to see if this one, how this one delivers.
All right, well, let's jump on over to Target, Ed. This one, not looking so great. It's been trading below the 250-day lines. So what are you watching with Target? It's another big retailer. Could give some insight here into the health of consumer sentiment.
Yeah, and this is sort of a sign because, Walmart has done really well, and not just because it's, it seems a little bit more lower end than Target, even though they're pretty similar, and Target's more urban. Target's just struggled, and it's had some time, here, maybe it's just a little bit that, it just hasn't gotten people. People seem to be trading away from it. Hasn't seen that gains. I don't think the e-commerce is doing as well as Target's, as Walmart's. So this one has repair work to do. You can see how this relative strength line has really deteriorated, whereas Walmart and Target and Burlington are all at or near highs. Target is not. Target is, and can this come back? This is a big name in retail, so is it just that the consumer is finding a few places, a few restaurants, a few retailers to go, and saving their money for those areas and not broadly? Because Target's like to see Target participate as well.
Right. And as we mentioned with Walmart last week, a lot of their gains coming from more of those high income shoppers. So maybe a shift there. But let's take a look at Urban Outfitters, Ed, because again, this one, attempted a breakout here, but this one's really fallen off. It broke that 50-day line decisively back on August 2nd. And now again, just trying to see if it can reestablish itself above the 200-day.
It's going to need some repair work. I mean, and if it gapped up, it would look really weird. I mean, it would be like straight up. So if it, it needs time, and it may be a while, because retailers, some of these youth apparel retailers benefited from, they didn't have many inventories going into 2023, and so so they ran up because they charged full price. They were just boom, 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 huge profits. Comparisons are tougher. Their inventories may be a little higher. So I want to see this come back, see if this and some other names can come back. But a lot of these are going to need some repair work to be actionable again.
Right. Just fundamentally, we can see the EPS growth here just decelerating over the last few quarters.
And it's only supposed to go up 18% for this fiscal year. And as you see, they've already had, they had 1 quarter of 23%. It's going to slow down some more. It's probably going to get even weaker.
All right, well, let's take a look. I know you said you like shopping at Ross. Let's take a look at Ross stores. This one moving powerfully above that 50-day line today, Ed. And so what are your thoughts here with Ross?
This looks like it's going to build a base next to this failed breakout. So it's not been performing as well as TJX, which sort of moved out, came back, and Burlington, which is just extended. This one tried to break out and then fell back. So clearly it's the laggard technically lately. It has solid fundamentals. You can see, those nice earnings, some, decent revenue gains. Today, technically, knowing that the relative strength line is weaker, you could have bought it today. The earnings, though, make that really difficult. And, because that and TGX will come a few hours or a day before that. So that's something else out there. So you could do it, but you have a real decision to make soon after that. Maybe better if it could come back up to around 150, the old buy point, form a handle. I'm not sure if it really has time to do that. One to watch right now. It's a little bit technically weaker than its peers, even though today had the best, move here.
Right. Well, let's take a look at Intuit. They post results next week. And this company does financial and tax software. And again, this one, building that cup with handle base, we have a 674.34 official buy point, but really looking strong here the last couple of weeks.
Yeah, sometimes you're a little more forgiving of things. And the last earnings report, that was ugly. Okay, that did not look good. So I'm not very forgiving of that. But then it seemed to be moving. And then, there seemed to be a lot of the stuff in this very messy handle reflects the stock market. Software, there's a lot of things that got hit. You can see how it was trying to go, and it kept on trying to come back. You notice that the relative strength line didn't weaken too badly as it fell from 670 to below 600. It was actually sort of trending up in some of that. So that shows you how that, and I'm sure it outperformed a lot of other software names in particular. So, if it could break above, it's almost got a trend line within that handle, or if it got up above 662, some of those levels in there, it could probably offer, an entry, something to watch. It'd be great if it could settle down. It doesn't have a whole lot of time before earnings to do that, but this is a strong long-term performer.
All right, well, let's wrap it up with a look at PDD. They haven't announced earnings yet, but it's possible that they may report next week. And this one, Ed, forming a base here, 164.69 official buy point. And as we've seen over the last week or so, retaking the key level here at the 50-day line.
Could have bought it there. Would have been really tricky because its rivals in China, Alibaba and JD, were going to be reporting, and they did report, and those were pretty positive results today, at least pretty positive reaction. PDD is definitely outperforming them at home, and part of the reason is just because they have their overseas unit, Temu, and there was other companies like C Limited that had good earnings this week. So, but you didn't know that necessarily heading into when it moved above the 50-day line. Look, if it could form a handle, it looks like it probably won't report this next week just because its history is it gives a week before announcing. It doesn't have to follow that history, but it'd be great if it could form a handle or some kind of pause, and then maybe move out on earnings. Strong earnings. Look, the earnings growth is going to slow. I mean, they had this enormous Temu growth that just is this brand new market, so it's been able to vastly expand the growth rates of Alibaba and JD in China. So that's going to slow, but still should be showing some strong growth. Definitely one to be watching here because of that international flavor that it has.
All right, Ed. Well, thank you so much for your insights today. And that wraps it up for this episode of Earnings Cheat Sheet. And if you want even more market analysis, be sure to tune into Stock Market Today. That goes live after the closing bell. Thanks so much, and we'll see you next week.